At the height of the tulip craze, one flower bulb sold for the price of a mansion, and within weeks, it was worthless.
Welcome to the Lawyer Millionaire Podcast, the show where law firm owners learn to build wealth, scale their firms, and design the life of freedom they deserve. Hosted by Darren Wars, business and wealth advisor for law firm owners and author of The Lawyer Millionaire, this podcast delivers the strategies and inspiration you need to break free from the grind and become the financial success you envision. Let's dive in.
If you love these kinds of stories, the real psychology behind money, join us inside the Lawyer Millionaire Book Club. Each quarter, we read a life-changing book on finance, business, or leadership and break it down together in a live session. This quarter, we're reading A Random Walk Down Wall Street by Burton Malkiel, a timeless guide to understand markets, speculation, and sanity. The link is in the show notes. So here's some real talk, friend. Every generation believes it's different this time. Whether it's Bitcoin, real estate, or artificial intelligence, every boom feels justified. But history whispers the same warning. When excitement replaces reason, the fall is never far behind. So today, let's go back to 1637 to a candlelit auction room in Amsterdam, where one of the most remarkable bubbles in human history took root, fueled not by greed alone, but by hope, illusion, and the simple desire to belong. Thanks for joining me today, friend. If you're ready to master your money and your firm, you're in the right place. Today, let's pull back the curtain on the tulip bulb craze, the original financial mania, and how it mirrors modern-day investing. Because what happened 4 centuries ago still happens today. Now, why should you care? Because the story of Tulip Mania isn't really about flowers, it's about human nature. It's about the urge to get rich quick, the fear of missing out, and the belief that success can be bought instead of built. As Warren Buffett famously said, if you don't find a way to make money while you sleep, you'll work until you die. But to make money while you sleep, you have to understand how to protect yourself from the madness of the crowd. And that is what this episode is all about. What's at stake here? Well, every few years, investors forget the lessons of the past. In 1637, it was tulips. In 1720, it was the South Sea Company. In 1999, it was dot-coms. In 2021, it was crypto coins and meme stocks. And today, well, many believe it could be AI, the transformative technology that has come about and has such real promise, but perhaps inflated expectations. When speculation takes over, fortunes are made and then destroyed. But here's the bigger impact for law firm owners. The same psychology that drives financial bubbles also drives business decisions, hiring sprees, overspending, chasing trends instead of building strategy. In both money and business, discipline beats drama. All right, well, let's get down to brass tacks. So what exactly happened in the Tulip Mania? So in the early 1600s, the Dutch Republic was one of the wealthiest nations on earth. Trade was booming. Amsterdam was the Wall Street of its day. Prosperity was everywhere. Into this fertile soil came a beautiful exotic flower from the Ottoman Empire, the tulip. Tulips were rare, delicate, and mesmerizing, and soon they became the ultimate status symbol. Owning tulips signaled wealth, culture, and sophistication. But not all tulips were created equal. The most prized varieties, like the Semper Augustus, with its red and white flames, were caused by a virus called the mosaic virus, and that virus made them unique and impossible to replicate. As demand grew, prices rose. And as prices rose, people began buying not because they loved flowers, but because they loved profits. Soon, professional traders, artisans, even farmers were dealing in tulips. And not only were they buying and trading tulips, my friend, they were buying and selling Tulip futures. Yeah, that's right. This was the original futures contract. Just like you can buy options on stocks, you could actually buy options on tulip bulbs. Wow. If that doesn't signal speculation, I don't know what does. Well, obviously, speculation took over. According to records, one bulb sold for 10 times the annual income of a skilled craftsman. Another traded for the price of a canal front mansion. Take 10 times your income, right? Imagine that being the price of a flower bulb, okay? I mean, this is giving Beanie Babies. At the height of the frenzy, people were selling land, even livestock, and even their homes to buy bulbs, and even to buy bulbs that didn't yet exist. Because remember, they started buying the options contracts on tulip bulbs. It wasn't just a flower anymore. It was a dream of instant wealth. But it all came crashing down on one cold February morning in 1637. At the auction that took place that morning, no buyers showed up. And just like that, confidence cracked. Within weeks, prices fell 90%. The government even had to get involved and assure people that there was no reason for tulip bulbs to be falling in price the way that they were. Sound familiar? The government even promised to buy out the bulbs, to buy them, buy people out to save people's fortunes at 10% of their stated value. But prices dropped even below that. Within weeks, prices fell 90%, contracts became worthless, fortunes evaporated overnight. The market didn't crash because tulips lost beauty, it crashed because confidence did. But maybe you knew this already, so let's dive a little bit deeper. Why did smart, educated people fall for this? Because markets are made of people, and people are emotional. And remember, it wasn't just, these were not just common people. In fact, common people were the last people to get involved. These were royalty and, skilled artisans and, the intellectual class of Amsterdam that got involved in this bubble, and it's not because people were any less smart than they are today. Smart, educated people fell for this. Psychologists have a name for this. They call it herd behavior. That's when our decisions are driven by what's happening around us and other people instead of logic. When everyone around you is making money, you get this feeling we call FOMO. It's the fear of missing out. That's the trap of every bubble. We stop thinking, we start following. And Tulip Mania wasn't the last time it happened, and it will continue to happen as long as human beings are involved in markets. Let's fast forward to London, 1720, to the story of the South Sea bubble, another cautionary tale that Burke and Malkiel reveals in A Random Walk Down Wall Street. The South Sea Company promised British investors a monopoly on trade with South America, the South Seas. On paper, it sounded like a guaranteed fortune, unlimited riches from gold, silver, and exotic goods. But there was one major problem. Britain was at war with Spain, who controlled those territories. The trade routes were mostly fiction. The profits were imaginary. Still, investors couldn't resist. Politicians, nobles, even one Sir Isaac Newton poured money into the South Sea Company. The stock soared from £100 to more than £1,000 a share in a matter of months. And then it collapsed. Newton famously said afterwards, "I can calculate the motions of the heavenly bodies, but not the madness of people." Sound familiar? It's the same pattern of the Tulip Mania, a kernel of truth wrapped in a story of unlimited potential. And that story becomes contagious until reality checks in. But here's what's really fascinating. After every crash, people always say the same thing. We've learned our lesson. People always change things dramatically. In fact, after the South Sea bubble, Britain outlawed basically the selling of stock certificates for almost 100 years. And yet, the next generation always finds a new version of the same old dream. .coms, crypto, meme stocks, AI. The name changes, but the psychology doesn't. And it's not just investors who fall into this pattern, it's entrepreneurs too. A new marketing platform that promises instant leads, a guru that sells a system that will scale your firm overnight, a new technology claiming to automate everything. Before long, you're building your firm around trends instead of timeless principles. Let me simplify this for you. Here are 3 timeless lessons from Tulip Mania and every bubble since that can make you both a smarter investor and a stronger law firm owner. Number 1, beware of the FOMO feeling. When everyone around you seems to be getting rich, it's easy to feel like you're missing out. That's the moment to pause. That's the moment to say, wait a minute. I'm about to make a mistake. FOMO, or the fear of missing out, is the fuel that drives every bubble. When prices rise only because other people are buying, that's not opportunity, it's a warning sign. Before you jump, ask yourself, am I making this move from conviction or from comparison? Lesson number 2, stay grounded in what works. When markets or business trends get loud, the winners are the ones who stay rooted in fundamentals. In investing, that means owning the market, the S&P 500, diversification, patience, and compounding. In your firm, it means consistent marketing, strong systems, and client relationships that endure. Don't let the next big thing distract you from the boring but powerful habits that actually build wealth. You know, the best businesses to own are boring businesses that are cash cows. You want a boring business. You do. Lesson number 3, don't try to outsmart the crowd. Even the experts cannot consistently beat the market. And here's why. Bubbles thrive on what economists call the greater fool theory. The belief that no matter how high the price, there will always be a greater fool to buy after you. But eventually the fools run out. The smartest investors and the smartest business owners aren't trying to play the game faster. They're trying to play it longer. It's survival that matters. Survival over the long term. Are you building a business that's going to make a quick buck, or one that's going to last far beyond even you? That's the business you want. Success in business and money isn't about luck or talent. It's about practice, discipline, and learning the right skills. The story of Tulip Mania reminds us of this. It reminds us that hype fades, but fundamentals last. And remember, friend, the ultimate form of wealth is freedom. At the Lawyer Millionaire, we help law firm owners master their money and their firm because that is the secret formula to freedom. And if you're serious about building your freedom, join us in the Lawyer Millionaire Book Club, where each quarter we dive into a life-changing book on finance, business, or leadership and turn big ideas into practical steps that you can use right away. You'll connect with other ambitious law firm owners who are building their wealth and freedom too. And the best part, it's completely free, but not for long. The link is waiting for you in the show notes. Freedom is the goal. Wealth is the tool. And you have everything you need to build both. I'm your host, Darren Wirtz. This is The Lawyer Millionaire. See you next time.
Are you a law firm owner looking to build real wealth and break free from the daily grind? On the Lawyer Millionaire Podcast, we share practical strategies to grow your practice, maximize profits, and create the financial freedom you deserve. Join host Darren Wars as he interviews top experts and successful law firm leaders who share their secrets. Don't just practice law, build a legacy. Listen now to The Lawyer Millionaire wherever you get your podcast. The Lawyer Millionaire Podcast is for informational and educational purposes only. It is not intended as legal, tax, or investment advice. Listeners should consult with a qualified professional before making any financial or business decisions. The views expressed by guests are their own and do not necessarily reflect those of Darren Wars or Lawyer Millionaire Wealth Advisors.